What's up, everybody? Welcome to the live. Let's can we make sure all is good with the sound and everything? How's everybody doing? Today we're talking about buying your first. Yeah, there we go. All right, can you hear me better? We're talking about how to buy your first investment property. Welcome. Where's everybody viewing from? Facebook, YouTube, Instagram, TikTok, Twitter. Who here is huh? Who here has bought a investment property before? Who here is looking to buy their first? Let's see the chat. Loud and clear. All right, great. Well, today we're going to talk about exactly how you can buy your first investment property. So, what was the title? How to buy your first investment property. Cool. All right, so that's what we're going to talk about today. My experience with buying investments has been similar and different than my partner Matt. I don't know if Matt bought his first house or condo. Maybe it was in College Station. I think they bought a property, then they ended up renting it out. They lived in it while he was going to college there and getting his master's degree. But myself, I've never lived in a property that I own. Matt and I and other partners of ours, we own, I think, about 88 units, single family homes, duplexes, triplex, quadplexes, mobile home park, small commercial multifamily, 8 units, 9 units. And I've never lived in one of those properties, nor have I really ever desired to. I've always lived in an apartment, rented out a room somewhere. Right now I live in a house that we rent out. And I enjoy that. But, may not be for everybody. I was talking to one of our entrepreneurs earlier today, and she's currently renting, but she just got approved to buy a home, and she's really excited about going out and buying her first property. She's going to live in it with her and her son, and that's great. There's a video that Matt and I did on the Alex vs. Matt channel where we had a little debate on should you live where you rent, or should you rent where you live, or should you what do we say? Should you live where you own or rent what you own? Whatever. It was a debate between me and Matt on living in the property that you own versus renting it out. And I won because, of course, you would make more money as an investment when you rent out your investment versus living in your investment. But we're not going to talk about that today specifically. We're going to talk about some different ways that you can buy your first investment property and maybe some good strategies that you should consider. Tim Dooley says he's looking to buy his first out-of-state investment. Arturo says that he's looking to buy his first investment property. So let's go over a couple ways you could go about doing it. First of all, you can get FHA loans on a property up to 4 units. And let's say you bought a fourplex, lived in 1 unit, rented out the other 3 units. You could use the other 3 units as income for yourself to help get approved for this purchase. So if the fourplex costs, I don't know, 500 grand, and maybe on your own income, you weren't able to get approved for a loan based on your income. If you bought a fourplex, you could use the other 3 units that are paying rent as income for you to help qualify for the loan. And so if I was getting started in 2023 and I wanted to buy an investment property, number one, now's a great time to do it. It doesn't matter where you're at. Prices have come down from the peaks that they were at, the last few years. Yes, interest rates have risen, but you can probably go get a loan right now for about 5.5%. That's not too bad. That's pretty good. It's not, 2 3/4 or 3 1/4 like it was last 18 months prior to when they started raising interest rates. But 5.5% is not that bad. Yes, your mortgage payment will be higher, but you're also going to be able to go out and negotiate and get some good deals right now. So if I was getting started today, here's what I would do. I would go and I would try and house hack. Everybody know what house hack is? House hacking is the example that I was just explaining, like with that fourplex. And it doesn't have to be a fourplex. It doesn't have to just be a triplex. It doesn't have to be a duplex. You could house hack with a home. You could live in one room and rent out the other rooms. But what house hacking is hey, is there any way to zoom in just a little bit more here so that we can see? What house hacking is, there's good. What house hacking is where you own this property and you're generating income from it somehow. So maybe you are Airbnb out rooms. Maybe you are renting out rooms to a long-term tenant, maybe one of your friends or something. Maybe you converted the garage and you rent out the garage, or you Airbnb out the garage. Or with a duplex, triplex, or quadplex, what you can do is live in one unit and rent out the other units. And like I said before, the income from those other units can help you get qualified for your loan. And house hacking is great. I've never personally house hacked a property that I own. Like I mentioned, I've always fully rented those out to other people. Um, but I've lived in a house that was being house hacked. I rented out a room. It worked out great. I loved it. My rent was like $700 a month at the highest. And then, I rented out my rental property. I didn't have to worry about it. $700 for all utilities, Wi-Fi, everything. But here's how you can go about it. And here's what I would do. I would try and go for 2, 3, 4 units and house hack. And the reason why is when you do move out of that unit, the more units, the better. When you got rental properties, more cash flow. You're getting it cheaper per unit. The difference between the cost of that unit and the rent that you're getting for that unit is much closer when you're buying a duplex, triplex, quadplex, more units versus a single family home. Like if you were to go buy a single family home in Austin today, probably paying around $400,000. And if you were to rent out that property, you'd maybe get 2,000, 2,100, 2,300, depending on where it's at and the condition of it. But you could also go buy a fourplex for 500 grand here in Austin, and you could rent out each unit for $1,000, getting $4,000 in rent. That is much better for your cash flow than the single family home. And really, most single family homes in hot markets, at least here in Austin, you're not going to get any cash flow, but you're getting the appreciation. But personally, sounds easy trying to find a quad in Virginia Beach. Personally, I like more units, the better. And depending on where it's located at, you could even Airbnb out some of those units. We have a fourplex in Round Rock that we Airbnb out 3 of the 4 units, and it brings in about $4,000 to $5,000 a month in income per unit. But we also have all the other expenses. We got to pay the manager, we got to pay the utilities, we got to pay, all the stuff to restock it. We got to pay the Airbnb fees. But we do come out better with the Airbnb units than we do the long-term rentals at the end of the day. But here's what I do. So that's why I'd go for a quadplex, duplex, triplex, quadplex. More units, the better. Your DSCR is going to be better. Your debt service coverage ratio, and they're just better, man. More units, the better. All of our properties that have more units than the others always do better in terms of cash flow. All right, so what I would do is I'd go try and find a fourplex wherever you're located at. One way that you can do this is, and if you're getting started in investing in real estate, I think it's really important to mention that you need a team. You're not going to do this all by yourself. You need all different types of team members. You need a lender. You're going to need a property manager potentially. You're going to need a title company. You're going to need a real estate agent. You are going to need contractors. You're going to need all these things, an insurance agent. You're going to need all these things that make up your real estate team. So first way I'd go out to try and find a, it's just real blurry. First way I'd go out and try and find a fourplex is I would get in contact with an all-star real estate agent. There's so many ways to go about this. First, you could go to Google and just type in real estate agent, Austin, Texas, or wherever you're at. You could go to Facebook groups and just type in your city real estate investment group or something, and you can search through all the Facebook groups in your city. Join them, go interact with people in there, get in contact with people in there, message people in there, ask people for referrals. But I would try and find an investment-friendly real estate agent. And the reason I preface that by saying investment-friendly is you want someone who understands what you're looking for. You want someone who understands your goals, who knows how to go out and find you good deals, who knows how to negotiate on your behalf. Also, they may know property managers, they may know hard money lenders, they may know contractors. So I'd go out and find an investment-friendly real estate agent, and I'd explain what I'm looking to do. I'd say, hey, look, I'm looking to house hack. I need a fourplex. With this fourplex, you can preface what you're looking for. More work, you want brand new, not as much work, what part of town do you want to be in? But all these, if you're looking at it strictly from an investment perspective, all these things that you may, tell yourself that you want for comfortability, like I need to be in this neighborhood, and I need to be in this school district, and I need to be, the house needs or the property needs to not need this much work, or I don't want to live in this part of town. I would try and remove all of your emotions that you're attaching to buying this property when you're house hacking. Yeah, take it into consideration. If it's really important to you, then stick to it. But what's really important to me when buying real estate is not all those things, because I don't live in the properties. But what's really important to me is the income. How good of a deal am I getting? What will I be able to sell this for? How much equity am I walking into? Those are the type of factors that are important to me when buying real estate. So find you a real estate agent, tell them what you're looking for, and tell them, see, if you haven't done this already, they're going to tell you to get approved for a loan. So get in contact with a mortgage lender and see if you can qualify for an FHA loan or something like that, where you can put like 3 to 5% down. But let's say you find a fourplex, and we're going to use Austin, for example, because that's where we're at. Let's say you buy a fourplex in Austin, Texas, and you're going to pay, let's say you pick East Austin on the other side of 183. You find yourself a fourplex that that needs some work. It's maybe not in the nicest area of town. It's not in Hyde Park. It's not downtown. It's not in Mueller, where you'd be paying way more for this fourplex. But let's say you find one that needs some work done to it, and you find it, let's say it's listed for $500, but you negotiate down to $450. So you're going to buy it for $450,000. You make the offer, you get approved for the loan, and let's say you put 3% down. 450,000 times 0.03. Anybody know the answer? How much is your down payment? Your down payment is $13,500. Do you have $13,500 saved up? If not, start saving. Uh, it's not that hard to save 13,500 bucks. It's not that much money, and you should be saving so that you can invest this money into assets that are going to produce income for you. But let's run some numbers. Let's say that this is your down payment. You're going to have some closing costs and everything. So let's say all in, cash to close. Let's say you put in cash to close. Let's say you bought down your rate. Let's say you spend $20,000. Cash to close. Down payment, you bought down your rate just a little bit. You had to pay title, everything. All right, so you got a fourplex. It has one vacant unit, and the other units are rented out for $850 a month. $850 times 3. Let's say these are all 2-bedroom, 1-bath. So it's bringing in rents, because you're going to live in one unit, remember? Your rents are going to be $2,550. Let's run how much your mortgage is going to be, give or take. These are not exact numbers. They're just estimates, because I know I'm going to hear about it. Minus, so your principal balance, 450 minus 430. Sorry, minus 13,500. So oh my gosh, your principal balance is going to be 436,500. Let's say you lock in a 6% interest rate. Let's say your property taxes are let's say your property taxes are 5,500 on this property, and let's say your insurance every year is about 2,500 bucks. 5 by 12. All right, so your rents coming in are $2,550, and let's say your mortgage, taxes, insurance, everything is going to be approximately $2,850. $2,850. So you just bought this property, a fourplex in Austin, Texas. Let's say you bought it $50,000 below what you think it's worth. You bought it at $450,000. Your down payment, $13,500. Your cash to close, because you bought down your rate a little bit. Maybe you don't have the best credit. You bought down your rate, title fees, origination points with the lender, plus your down payment was 20 grand. And there's currently 3 units rented out, and they're all rented out for $850, I think I said. So you're bringing in $2,550 a month worth of rents, and your mortgage is $2,850. So you are living for $300 a month. That's what you're paying. That's the difference between what you're getting in rents and your mortgage. And that's, if you want to consider it that's your rent, is you're paying $300 a month. You're living in this unit, and you're going to fix it up. Now, this is great, right? You just bought a fourplex, got an FHA loan, only 20 grand to get it with cash to close. You're bringing in some income on it, and you're only paying $300 a month to live there. Now, you could manage this property yourself, and I imagine that this person probably would, but maybe you don't want to. So if you do have a property manager, that's going to come out of the rent, so that'll be another expense. But let's say you are managing it yourself. You introduce yourself to every tenant. You tell them how to make rent payments to you every single month. You fix any problems that they have with maintenance that may come up. And let's say that you just bought it. So you bought it in January, and in 7 months, their leases are renewing. So that means that their lease term is ending, and it's time to renew their leases if they want to stay and if you want them to stay. So let's say that you like them. They always pay their rent on time. They're quiet. Remember, you live in one unit, so these are all your neighbors. You like them living there, and $850 is pretty low. So let's say that when it comes time for renewal in 7 months, you go to each neighbor. They know that they have low rent, 2 bed, 1 bath in Austin. And they've got a new landlord now. The old landlord was bad, never took care of anything. New landlord's responsible, and you help these tenants get whatever they need. And you tell them, hey guys, property taxes have gone up, because of this, and the rents, being very low. We have to raise rents here just in order to stay afloat with the rise in property taxes. So we're going to raise your rents to $1,100 a month. And you're still living in the other unit. So 7 months from now, you raise the rents to $1,100 per unit, and now you're bringing in $3,300 a month. So now you actually are cash flowing. Now you got $3,300 a month coming in rents. Your mortgage is still $2,850, and you're making about $450 every single month to own this property and live there for free. Now you will have other expenses that come up along the way. You're going to have some maintenance. You're going to have stuff's going to happen. You're going to have to replace, you're going to have to replace an appliance. You're going to have to fix some leak that comes up. You're going to have to do something. Owning real estate, you should always expect to constantly have to put money back into these things for maintenance, unless you bought it brand new. But that $450 a month should cover you. And even if you spent $450 a month in maintenance on the property, which you wouldn't do for forever, you'd still be breaking even and living here for free. So if I was getting started in 2023, this is what I would do: is I would go house hack, and I'd push it, and I would try and find a fourplex. I'd try and find it in a good market like Austin. I'd try and get a great deal on the purchase price. Buy it, $450 was probably worth $500. Get your 3% down payment on it. Rent out the other 3 units and live there for free. And then as soon as I possibly could, I would move out of this property and I'd rent out the other unit and I'd start cash flowing. So this is one way to do it. Now you can do this same thing with a single family house, and you can rent out the rooms to people, maybe your friends. We know someone that used to do this next to a Dell here in Austin. He would buy single family homes over off Palmer on the east side near Dell, and he would rent out these rooms room by room to people who are working at Dell. They moved here, they needed a place to live, they're quiet, they didn't really need much, they didn't want their own house. You could do this with people near Tesla here in Austin, near Apple, near Samsung coming up once that facility is built, in Bastrop near the new SpaceX facility. You could do this with a single family house and just rent it out room by room. If your city permits you the availability to do it, you could also Airbnb out some units, so some rooms. We know someone that Airbnbs out her garage. She converted it. It's basically a studio. She and her family live in the house, and she Airbnbs out the garage to people. And I think it does pretty well. And her and her family, they manage it. They wash the sheets. They clean it. They stock it. They, welcome the guests when they come. They do all that themselves. And that's how they're house hacking their house in Leander. But I would try and figure out a way to house hack it, because if you're just going to buy a house and live in it, just don't call it an investment. Just call it you buying a house. But if you want this thing to generate income for you, then figure out a way for it to generate income. House hacking is a way to do it. And like I said at the beginning, if you're just coming in here, more units the better, which is why I would go for a fourplex versus a single family house or a duplex or a triplex. I would try and go for the most units possible allowed by the FHA loan, get my 3% down, and generate some cash flow. What do y'all think about this? Anybody here house hacked before? Yay, nay?
How? Mission to traveling to Austin in March.
Very cool. Come, let us know when you get here. And welcome to Austin, Texas. And hey, look, if you don't have 20 grand to put down, don't worry about it right now. It doesn't mean that you can't invest in real estate. We are running a webinar this Saturday at 11 a.m. You have to register. Link is in the bio. And we're going to teach you exactly how to invest in real estate with no money. You don't have to have money. You don't have to have credit. You don't have to have all these things that maybe you're telling yourself preventing you from investing in real estate. All you need is knowledge, and you need the ability to spot opportunity when it steps in front of you. So make sure to sign up for that webinar. You have to register. We'll send you the link, and we'll teach you on Saturday how to invest in real estate with $0. But this is how I would buy my first investment property. But you don't have to live in it. So you could go the Alex route and never live in a property that you own. And my strategy would be the same, except to be a different loan. So, you know, the FHA, you gotta live in it, or at least you're supposed to. Otherwise, you're committing mortgage fraud. But supposedly, I would, if it were me and I was buying my first investment property, I would do the same exact thing. Maybe it's not a 4-plex, maybe it's an 8-plex. Maybe it's something along those lines. I would try and go and get as many units as I could, and I would rent all of them out. I wouldn't live in one unit. And then I would go rent out a place for me to live. You know, I don't need much. I'd rather get that income coming in and spend less than that income's coming in on that unit on the rent that I'm paying. So I would try and go buy a 4-plex, an 8-plex, a duplex, something. And you know, if you have cash saved up, if you got 20, 30, 40, 50 grand, you've been saving this money just ready to deploy it into the market, I would go and I would deploy it into the market. And I would buy one of those properties, and I would get some cash flowing real estate. Now, if you don't have 20, 30, 40, 50 grand saved up, there's a few ways that you can go about it. You could go partner with TRE, bring us a deal, and let's buy it together. You could go partner with somebody else. You could find the property, partner with someone, get them to put the money up. You could convince the seller to seller finance it to you. There's so many different ways for you to be creative to get a deal done, but I would go out and I'd be looking for cash flow income producing assets. But house hacking, like we just went over, is a great way to get started. It's not going to cost you that much money, and it'll pay you over the long run. You can lock in one of those loans with 3% down, which would be great for you. And then let's say 3 years later, that same 4-plex, 3 years later, here's what it's going to do for you. So you're going to be able to depreciate that asset. Everybody know what depreciation is? If you're in a market like Austin, you should be seeing some appreciation with the real estate asset that you bought. But with the IRS, you're able to utilize depreciation. You're able to depreciate the improvement value of the property. So you can't depreciate the land, but you can depreciate the improvement. And the IRS allows you to depreciate the asset, depending on if it's commercial or residential, over straight line depreciation over a period of time. But you can also use a cost segregation study to accelerate the depreciation and take 27 and a half years of straight line depreciation in 3 to 5 years. And that will help offset any income that you got coming in. But you can use straight line depreciation if you don't want to get the cost seg study. And any of that cash flow that you'd be getting that we went over, the depreciation will bring that down to 0 or below 0, and you won't pay any taxes on that income, because at the end of the day, the income versus your expenses, one of which is depreciation, it'll offset it, and you won't pay taxes on that cash flow income that you got coming in. So depreciation, appreciation, and you get cash flow every single month, and then you start saving up that money, right? So 3 years later, let's say rents have risen to $1,500 a month. My marker's running out. $1,500 a month per unit. So now you're getting total of $4,500 a month in rents. What was my mortgage payment? $2,800. $2,850. It would probably go up because property taxes are going to go up. So let's say now your mortgage payment is $3,000 a month because property taxes went up. So you're getting $4,500 in rents. Your mortgage is now at $3,000 a month, and that means you're getting $1,500 a month in cash flow. How much is that a year? You're getting $1,500 a month in cash flow. You could use this money for whatever you want. If you were smart, you'd be saving this money and you'd put it in more real estate deals. Let's say now, so you bought it for $450 3 years ago. Let's say your market saw a bunch of appreciation. Let's say it's now worth $450. When you bought it was worth $5. Let's say it's now worth $680,000. $680,000. Let me show you how to extract your money from this property. $680,000. Look at this. This is so beautiful. $680,000. And let's say you approach a bank and you tell them, look, I want to refinance this property. Mortgage rates have dropped since 2023 when Federal Reserve was raising rates and inflation was crazy. Well, they've now tamed this and interest rates are back down. So I want to refinance this property at a 3.75% interest rate. I want to do a cash out refi at the new value of $680,000. And let's say the bank says, yeah, you're great. Your credit has improved. You've got a good asset. It's producing good cash flow. It meets our DSCR requirements. We'll give you a cash out refinance and we will lend you 75% of the new value of the property. So what is 75% of $680,000? They're going to give you a new loan amount for $510,000. They're going to give you this loan amount right here. And with that $510,000, you're going to need to pay off your old loan, which your principal balance was minus 13.5. Your principal balance was around 436. So let's call it 430. So you're going to take this $500,000. You're going to pay off $430,000 back to the bank who lent it to you in the beginning, and you get to keep the difference. So you're going to be able to pull your money out of this deal, and you're not going to pay taxes on it. It's a loan. You're going to pull out $510,000, pay back $430,000 to the original bank, and you are going to get to keep $80,000 minus any closing costs that need to be paid to the lender and such. So the $20,000 you put in, you get to pull it out with this 80. You're going to keep $60,000 on top of your 20 that you're getting paid back. Your mortgage payment may or may not go up. Let's do some math because you're now at 3.75. Here's your new principal balance, 510,000 times 0.0375 plus your property taxes are now, let's call it $7,000. Your insurance by 12. You know what? Your mortgage payment may have even went down because you bought it at that 6% interest rate, and you're now refinancing the new value at a 3.75% interest rate. You get to pull all your money out. You get to take that $80,000, go buy another deal, do it again, and get all your cash flow, even maybe more cash flow because you're refining at the lower interest rate. And this is the power of real estate. You get to pull all your money out. You get to utilize leverage from banks. You get to get cash flow along the way. All this cash flow can be written off via your expenses, depreciation, and you get to multiply your money. You get to go do this again and again and again and again. And this right here is how you build wealth through real estate. Uh, if you wanted to go buy this fourplex cash today, well, I mean, first you need $450,000 plus closing costs. But then how long would it take you to get another 450 grand to go do it again? Utilize debt, utilize good debt, and make sure that it cash flows. Make sure that you can do a cash out refinance later, pull all your money out, continue buying more real estate, and utilize all the benefits that real estate has to offer you. Because this right here is how you go from buying your first property to your fourth property, to your 12th property, to your 20th property, to your 100th property, is by utilizing all these benefits that real estate has to offer. And everybody says money doesn't grow on trees, but it sure grows on properties. And this right here is proof of that. So if I was you, this is what I would do. I would go do this with if I had to live in the property that I'm buying, I would go house hack it. I would buy a fourplex. I would max it out. I'd buy a property that I'm getting a great deal on, a property that I can raise rents on, and a property where I can basically live for free or make money doing it. If I didn't want to buy a fourplex for whatever reason, I'd buy a triplex. Then I'd buy a duplex. And then last case scenario, I'd buy a single family home. Just because of the difference in cash flow that I'd be getting from more units. But I'd go buy a single family home, worst case scenario, and I would rent out the rooms. I would Airbnb out the rooms. Shit, I'd go live in the garage myself and rent out the whole house to somebody else. I'd figure out some way to generate as much income as I possibly could from that property to not, take on this full liability and expense of owning it and living in it myself. Owning it without having it generate income is a liability. And I think these last 6 months kind of prove that. What if you bought your house at the peak? Let's say you bought it in January of 2022. You're probably like 100 grand below water right now based on what you paid for it. Its actual value. So just buying a house is not an investment. You got to make smart decisions. You have to find properties that will generate income for you, buy them right, utilize good debt, make sure they generate income, utilize all the benefits that real estate has to offer you. And that is how you're going to build wealth. But that's how I get started. First step is you need to find some deals. So like I mentioned, go find your all-star real estate agent. Go speak to some wholesalers. Go to some real estate meetups. Go network with people. Reach out to us. If you're here in Austin and you need help finding one of these deals, you send us a DM. We'll help you out. We got plenty of entrepreneurs who know where all these deals are at. So go find some deals. Figure out your strategy. Get approved for a loan. If you're buying your first property and you're going to live in it and house hack it, go get your FHA loan so you can put 3 to 5% down. Figure out your plan, raise the rents, cash out refi, get your cash flow, and then do it all over again. And if you do that over and over and over and over again, you will be very wealthy and you will be able to create wealth through real estate. And this is the best way to do it. Don't take your money out of the stock market and put it into real estate. That would be my advice. We have any questions before we get out of here? I'm happy to answer any questions that anybody has. Type them in the chat, YouTube, type them in the comments, Facebook.
golden idea for a house hack.
Huh? Yeah. That's right. Who said that? Mr. Sweeney? Thanks, Mr. Sweeney. All right. So again, don't get discouraged if you don't have 20 grand to buy this property. Saturday, make sure you sign up for our webinar that we're putting on. It's free. Come take an hour and a half out of your day. Sign up for the webinar. We're going to teach you how to invest in real estate with $0. That's right. $0. You don't need money to invest in real estate. You don't need credit. You don't need a loan. All you need is knowledge. Come grab this knowledge on Saturday. We'll see you there. Make sure you take advantage of the wholesale course too. If you don't have any money and you need some money, you should probably learn how to go make money. And one way you should be able to make money in real estate is through wholesaling. Wholesaling will be great for you. You're going to need the knowledge of how to find deals, how to find buyers, how to negotiate, how to write up a contract, how to take a file from A to Z Z being you getting paid, A being you finding a deal. You need the knowledge of how to take down a deal when you see a deal. And if you need cash and you want to build up cash, wholesaling is a great way to do it. There's like 8 days left that we're offering it for 50% off. So go take advantage of it if you haven't already. Kat will put those links in the comment section as well. They're also in the bio. We won't be offering it after February 1st. The 50% off is gone. And it'll go back up to $9.97. Right now it's $4.98 or whatever. So go grab that if you haven't. It won't be 50% off for forever. Stack up your cash, get your knowledge. We'll see you on Saturday, and let's go buy some more real estate.